What is going on YouTube? Welcome back to the Clover Trading Channel. My name, for those who don't know, is Kyle Williams, and in today's video, I have a little secret. I want to let you guys in on what I think has been some of my best long trades over my career. Now, if you know my backstory, I am a short seller at heart. 90 to 95% of my profits has come from short selling. So you might ask me, Kyle, why on earth would I listen to you about going long? And I fully agree. I am not by any means even close to being the best long trader out there. I am profitable, so I am one of the better, but by no means am I that great at longing. But the reason why is because I'm only good at longing or even halfway decent when I am long in certain areas because I've been caught in some pretty awful short squeezes, right? Because I've been shorting for so long, I've learned where the worst and best spots are to be. I learn where more shorts are caught, mainly because sometimes I've been caught myself. I've been in situations where I'm uncomfortable. I've been in situations where I got caught off guard, right? I know where shorts are uncomfortable because I am one. And from doing so, I have seen some incredible inefficiencies or opportunities or windows where going long was actually a way better move than going short. And so there's an actual specific pattern here that I want to share. It's not very common, and I've only seen it a handful of times, but it has resulted in some of the best, call it momentum or breakout longs that I've ever personally traded or created for myself in terms of P&L. And so in this video, I want to go over those things. You're going to notice a pattern. They look all the same because it is kind of the same daily and pattern look to it. But again, I think it's one of the best ways to kind of see when a short squeeze is coming. And again, short like myself, I get the hell out of the way and I actually try to get long these things. So let's jump right in. Now, the first ticker that brought me to this kind of idea, this epiphany, this look of a daily chart was all the way back in 2021 on GME here. So if we scroll back to GME, for those who weren't around then, it's best to know what happened. We saw one of the most insane squeezes we've ever seen. I mean, GME went from $4 all the way up to 120. Now, granted, this is after it split. It really went from, I believe, 5 or 6 all the way up to, I think, like 500 or 600 of the highs here, but it did split back down. Nonetheless, it's a huge percent move. And what happened that caused, I think, really created this move or helped feed it in there, feed its fire, so to speak, was this candle, this very specific candle on 1/26/2021. Now, the reason being, let's go over the psychology here on terms of where shorts are and why I think it's a good long. One is it's already extended, right? It's already had its run here from $4 and it's, popped up to about 10, consolidated, and then pushed all the way up to as high as 39.40. Once it does that, a short seller like myself, that catches people's eye. That catches my interest, especially when it then goes from 40 and pulls all the way back down and closes at 19, right? This is a daily chart. So in this daily candle, it went as high as 39 and closed at 19. When a stock does that, as a short seller myself, I'm like, that thing's dead. That thing's backside. It just went from 5 to 40 and then just crashed 50% off its highs. Like, that's it. Like, that's the run. But what happens if it's not? And you can see that in this daily chart. And the very next day, it closed at 18 or 19, but it gapped up to 22, which isn't too uncommon. But if someone got short and thought, oh, it's done, it's going to die, it's going to fade, I'm never having to see any form of strength again, well, you'd be wrong, right? It gapped up and it actually ran, and eventually it squeezed, and by the time it closed that day, it closed at 37, only a couple dollars a share off its highs from the previous day. And so again, if you're a short seller and you're in this stock, you're swinging it, you're looking to take it lower, you're thinking the run's over, that was it, it's done, and the very next day, you almost in denial, you can't believe it's coming back. People get caught in that, right? Short sellers get stubborn to that. This is a very powerful move that people don't want to believe or expect if you're on the short selling side. And so what happens the next day? It literally gaps up to, the 80s, like over 100% gap up. And again, at the time, this was now in the hundreds place before the split, but you get the idea here. If we actually go into the intraday on, we can do the 125th to the 126th in January. Here's the intraday here. And this was the move, right? This was the move on that first day where it went from, pretty much its opening price. Well, and actually, this is actually, now that they give it to me intraday, this is actually before the split, so you're going to see the actual prices here. At 100, spiked all the way up to 160, and then pulled back all the way down into the 60s and closed right at, what is the 70s, roughly? So when you're almost, call it 80 to 90 bucks off its highs, most people, including myself at the time, was like, oh, that's it, it's dead, it's done, that's the run. But then you, again, like I said, on the daily perspective, but now on intraday, next day it gaps up, and it holds these levels, right? It almost like triple bottoms here at 80 bucks, and it starts running, and it starts going right back to these highs on the previous day. day. And before you know it, where do we close? We end up closing right here, right around 140, 150. And it's only, again, a few dollars off that 157, 160 at my highs. Looks like 159. And what do you know? Look at after hours. Look at this move after hours. Just explodes. And again, you can't see in the daily because the daily chart only shows the regular hours. But once the market closes right here at 4 p.m. Eastern, next day it just explodes, or in after hours, right? And leading into the next day, which is what led to it opening up in the hundreds place, even higher, 200, 300. You can ultimately end up going up to like 400 or 500. That's a powerful move. And again, I wasn't here for this. This was the first time me seeing shorts like this get caught off guard. I wasn't one of them. I was kind of too scared to short GME around this time period, but I saw it happen. I saw myself live through it of like, if I was short, what would this look like? And this is what gave birth to this idea. So let's go over a few other examples. Now, the next one is obviously the one that was closest related to GME, which was AMC. Again, this one was also one that ran huge back in 2021. If we go back to the daily chart here, same idea. This is around the time it did it for when GME ran, because as you can see, AMC gapped up in the late January all the way up to as high as like 100, 200. Again, this is also many splits later, so it didn't actually go this high. I believe this high here in the 700 was actually like 80 bucks, 81 if I had to be specific. But nonetheless, same idea here. Like, let's go back over the concept. Well, huge run. This one, again, from 120 all the way up to 360. Again, post splits, or reverse splits, I should say. Pulls pretty hard. And you think, as a short seller or someone who's even long, like to see your investment go up a ton or your trade to go up a ton and then pull back as hard as it did on this day on, the 28th of May. So that's a shift. That looks like a momentum shift until it's not. And again, a little more aggressive than GME. Instead of gapping up slightly and then running, it actually gapped up pretty large and then held its gains. Same idea though. Same idea of like denial from short sellers. Same idea from just, I can't believe it's still holding up. It shouldn't be doing this. It should die. And all of a sudden should becomes into I should get out. Not that this should be happening, but I should be getting out. Creating a short squeeze, right? If we go ahead and go into the intraday, same idea. Very similar looking to GME. Had a morning strong spike and just got crushed. Okay. Closed near its lows. Much more aggressive gap up the next day, but then held, it didn't necessarily run higher, just kind of chopped in this range. But same idea, same exact concept. Once after hours hit and it wasn't fading any lower, anyone who was still shorter, anyone who recognized the strength in this thing either started buying or started covering, and the squeeze began, right? Again, as we look at the intraday, you can see what price it was before it split. Again, so we're in the 30s here instead of the hundreds like the daily chart shows. But again, same exact concept. And I actually longed this. I took this, I believe, from the 30s here and took it overnight. I ended up selling the next day. If we go into the next day's chart here, I ended up selling in like the 50s. I think my best sell was in the 50s here before it went absolutely even more nuts all the way up to 70s. But again, I took a small position long overnight in the 30s, sold a little bit in the high 30s, and then just scaled out into the 40s. And then my last piece, I believe, was 50 bucks. Again, went a whole 20 bucks a share higher, but I made 14 grand on this trade. And again, the sole reason why I took it is because I understood the concept of it that happened a few months back on GME. And again, 14 grand for me on the long side is actually very large. Short side is not too large. Short side, I've had plenty of 5-figure gains, but I haven't had too many 5-figure long gains. So to make 14 grand was really sick at the time. It's one of the best. I mean, even today, 14 grand trade on a long side is really, really awesome. Again, this was the first, call it, implementation of me actually taking the trade and profiting on it. Great. And again, let's go over some more examples. More recently, I know this was back in 2021 when the market was really, really hot, but it still happens. And so let's go over those examples as well. And so the next example we have here is GTII. I hope you know if the trend here is that when this does happen and when this does create really strong moves and really strong squeezes, it creates a massive, massive run, right? Clearly now on our third example here, we've seen what this move creates is a huge multi-hundreds of % move in the stock price usually. GTII here, this happened late 2022, so a little over a year ago. Again, a little bit different looking, but same concept. And again, I can say this with utmost certainty that this is what happened because I was in it. I was actually short it, covered, and then realized how difficult that shorts were stuck in this thing and went long. So literally this day here, back in, it was at like 60 to 50 cents-ish, ran all the way as high as 178 and had this wick, right? Again, this is daily chart, so it pulled from 178 and closed at about 93 cents. Quite the pullback. But again, gapped up, which is what GME and AMC did, but instead of gapping up and then running higher, it gapped up, spiked, failed, and then it closed at 123. But again, the next day, it had a red day. It closed at $1. It was down like, what, 20, 30% or whatever it was. But that's not where it caught shorts. Where it caught shorts is the next day, because it gapped up again. Anyone who was short this, again, I was short this. I shorted like the 130s, 140s, and I ended up covering in the 90s. So I dodged this gap up the next day on the 26th of September. But again, it gapped up, and again, we closed at $1. It opened at 130. So a whole 30% gap up. The reason I can say this so confidently is because I immediately woke up to that gap up and think, wow, I dodged a bullet. Whoa. Like I covered at $1, and all I could think about was like, if I was still short, I would feel so stubborn. I would feel so tilted. I would feel so frustrated of like, this thing should die. Why is it coming back? I put myself in the shoes as if I was still short. And I said to myself, if I'm still short, I'm going to get squeezed. That's literally what through my head. And so I ended up doing the opposite because I wasn't actually short. I was just in my head. I went long. I literally bought the close right in like the 170s here, right near the 178 high from the previous day. And what do you know, the next day it gaps up. They put out a PR. So that was good. I wouldn't say good luck, but just went in my favor pretty well. And it was spiked all the way up to 270. I made 10 grand on this trade. Specifically, again, if we want to go in the intraday here, we'll go into the 26th to 27th. So in the intraday here, like I said, in the first day, it doesn't look like much. It actually looks quite sideways. But really, if you look at the price, again, it gapped up and opened at 130, that 30% gap up, spiked all the way to 150s, consolidated nice and sideways all day long. For those who've been trading the OTC market for a while, because GTI was an OTC stock, we haven't seen this happen in a long time, but Dom kind of coined this as what he would call it, the OTC swizzle, because it just kind of swizzles there, just kind of hangs out in this little very tight consolidation period. And at some point it has to pick up, I'm going up or I'm going down. Can't go sideways forever. And so late day, I started to pop more. I started getting long. I think I accidentally sold a little bit of my position here, but kept the majority of it as it spiked right into the close. And right at the 170s area, right before that 178 breakout, next day it gaps up to $2 and spikes all the way to 270. I believe I got out at best case like 250, but nonetheless, another 5-figure trade. I made $10,000 on this trade. Now, it did pull back midday, kind of held itself, came back, and then back to the daily chart, ends up going a week later all the way as high as 9. I only longed it and sold my position after this first day here. 4 days later, it's at $9. So quite the run. Shorts kept shorting. Some got squeezed for sure. And I think this beginning of it where I longed was kind of the beginning of that. Again, another great example. And that was only last year. Let's go over some examples from this year, 2023. So,
ever dreamed of trading like one of the Clovers? Well, it all starts with the right broker. Clover Trading and Centerpoint Securities have teamed up to supercharge your trading experience. By joining Unlock the Power of CP Edge exclusively with Centerpoint. We're talking top-tier trading tools worth over $6,000, all at your fingertips. Get ahead with real-time scanners, cutting-edge news, and a tailor-made trading journal. Experience trading like never before with superior short inventory, personalized support, unmatched trade execution, and interest on your idle funds. Plus, you can get competitive pricing that fits your trading style. Ready to elevate your trading game? Click the Clover Trading link in the description below to get exclusive deals with Centerpoint Securities. Now let's get back to the content.
HCNWF here was also another OTC. So we've done 2 NASDAQs, so 2 listed stocks so far, GME and AMC, and then we've done 2 OTCs, GTII and now HCNWF. So it happens on both listed and OTC exchanges. Now, I think you know the drill by now. Looking at this run, you can see exactly what day I'm talking about. It is this day right here. Same idea, started at 30 in the 37 cent area, ran for 2 days straight all the way up to $1.58, pulled back and closed at what, 96.5 cents that is? 96.5. Next day, gaps up, has a little wick to the downside, but holds its gains and ends up closing right in the 130s. Again, not as close to the previous highs as before. And in fact, actually was not even that big of a gap up, right? It actually gapped up, but below, call it resistance at 158, that wick top. But again, actually gave you time for it to pull, hold again, and then almost break out, like call it like a 2-day breakout. You could have just bought the breakout. You didn't even have to take it overnight. I personally took it overnight. So having seen this happen multiple times now throughout my career, I said, yep, this is good. Volume was big at the time. I took it long. I forget exactly where I sold it. In fact, if we go in the intraday, I remember they actually ended up halting it for some news that came out, and I believe I sold it after that news. If we go into the 4-5 to 4-6 here, this is the intraday, right? I had the pop, and actually this wick candle actually shows that it's lower, but I don't think it ever actually touched that price. Morning strike, morning strength, all the way up to the 140s, a little bit of dip and weakness, but still kind of started making higher lows, right? And ended up closing right up in here, right at the 130s, again, right near the highs. And again, in the previous day, the high was like what, the 150s, that high, the wick high, and the next day, small gap up, doesn't even gap up that much, holds red green really freaking well, right, out the morning, and then spikes again, and now we've broken out. We've broken over that previous resistance. We're now into the 170s, and it just keeps grinding and grinding and grinding. Before you know, we're over $2. Now, this is when the PR did come out. I forget exactly what the PR was. I think it was about some kind of offering, but an offering that wasn't going to happen just yet. Don't quote me on that, but I think I remember that because, again, it did open up and then pull really hard, but then to recover. I remember selling a little bit out the open, but do remember, unfortunately, kind of puking it near the lows here. It did end up recovering, and then as you know how it happened happens on the daily chart, we close in the 190s, but if you go to the daily again, we end up touching all the way as high as 450. Same theme when the shorts kind of get caught, or when long can recognize this kind of inside candle from some kind of wick or some kind of previous top that ends up actually holding well and retesting and coming back in a very short period of time, can lead to these very, very explosive moves. And again, the last example that we have that happened this year was SHOT. Ignore this little candle here because I did trade it today, the day I'm filming this video, but I did just long this back in November 2023. Why? Because again, I'm already hovering over it. You can see the candle I'm referring to here, this one right here. And again, it's not as aggressive of a move, which kind of maybe explains why the move wasn't as big. I mean, it's still pretty powerful. It went from 3 all the way to 750. So again, it's still 100% plus move, but it wasn't like the previous ones that went, 2, 3, 4, 500% higher. But nonetheless, it's still an awesome move in itself. And so again, same idea, went from the low ones to mid ones all the way as high as to 330, had a small wick, not that big, but big enough to think that it could die. Actually did go red. And again, I can say this with confidence because I tried to short this red day and lost. I tried to short out the open, it panicked, it immediately came back green. I covered for I lost like $500. Very small loss nonetheless. But having that happen to me, I realized this thing isn't weak at all. Shorts to anyone who shorted have not gotten out for a gain. Far from it. They're actually now down on their position, having it come back into the mid threes. I bought it at like 320 into the close, or 315, whatever my average was, right near the closing price. Next day over the weekend, they put out another PR, and what do you know? It runs all the way up to as high as 473. I think I sold out in the 4s. The next day after that, it runs to 750. So huge opportunity for these. I made only $4,000 on this one. Now, not only $4,000 is great, $4,000 in profit's awesome, but in comparison to the previous gains that I've made in the past, usually it's a good 5-figure win. So SHOT was one of the smaller wins for me just because I didn't go as big of size. But again, all the other trades were 5-figure wins for me. So really awesome to see. Again, it doesn't happen all that much. It's not like the holy grail that's gonna retire you if you want to be a long trader, right? But as someone who short sells as much as I have, it's in a pattern that I've identified to see in the market that when it does happen, I get the hell out of the way and I actually want to get long, right? Again, if you know my trading, my longing is not that great, but when I do long, it's Dos Equis. No, just kidding. I want to go long these kinds of daily charts, right? The ones where the inside candles kind of catch shorts off guard, and all of a sudden you have a 1 or 2 day breakout already in a very momentous run, and you get awesome blow off moves. So hope that helps your trading, guys. If you're looking for something to get better at longing or recognizing daily chart patterns like this, if you want to learn more about this, again, we have Clover Trading Chatroom. That's awesome for people to join. We do offer a 7-day, $7 trial for you to come check it out, watch all the archive webinars, video lessons, you name it, ask us questions, all the good stuff. So hope to see you in the room. Hope you enjoyed the video. Make sure you like and subscribe, and I'll see you guys in the next one. Thanks so much.